Hey guys, Kyle here. Your credit score decides whether banks ultimately lend you money, but your insurance score decides whether insurances raise your rates, even if you've never filed a claim. So in today's video, you'll finally see why two separate numbers control your finances and how knowing the difference can save you hundreds of dollars every year. In the next few minutes, you'll learn exactly how credit scores and insurance scores are calculated, why lenders and insurers weigh them differently, and the key factors that you can control today to boost both numbers. So by the end of this video, you know which habits raise your credit limits, which behaviors lower your premiums, and how to spot the data mistakes that are silently costing you money every single month. The first thing we'll start with is your credit score. Your credit score is the three-digit grade lenders use to predict whether you'll pay back borrowed money, and it comes straight from your repayment history. On-time payments build more credit points. Missed ones ultimately will slash those. There's also the idea that they take in current balances, credit limits, account age, new inquiries, and the mix of loans and credit cards you already have, which can ultimately contribute to your credit score. Nothing else matters. So traffic tickets, speeding violations, and even your insurance claims actually don't touch this number, which is one of the main reasons why, if you're trying to raise your credit score, focusing on paying every bill before the statement cut date and keeping utilization under around 30% is going to be one of the fastest ways to push your credit score up higher and unlock lower interest rates on future loans that you're planning on getting. Now, on the opposite spectrum of this is the insurance score, which can also sometimes be called a credit-based insurance score. This pulls many of the same credit file data points, but rearranges the weights to predict how expensive you'll be to insure, not whether or not you'll repay a loan. That obviously is for credit scores. Late payments and maxed out cards are still going to hurt you, but ultimately insurers are going to ignore things like income, job history, and the actual dollar limit of your credit lines. Then what they'll do is they'll end those credit factors with your claim frequency and policy lapses to forecast any potential future losses that might occur, which is why two drivers with spotless accident records can see entirely different premiums, because one keeps high balances or opened 3 new credit cards last quarter, while the other one pays in full and lets accounts age gracefully. Unlike credit scores, insurance scores can't legally deny you a policy. Insurers must still offer coverage, but the big caveat here is that they can legally hike or discount your premium in most states. There are, of course, notable exceptions to this, like California, Massachusetts, and Hawaii, where credit factors are banned for auto rates. Everywhere else, underwriters will ultimately run your insurance score at renewal, quietly sliding you into a higher or lower tier without even making a phone call to you. So checking your state's rules and requesting a tier reassignment after you clean up your credit file can trigger an immediate price drop, even if your driving or claims record hasn't changed much. Now, in order to lift both of these numbers at once, you can pay every card before the statement date so utilization shows under 10%. Also, there's the option of setting auto pay or installment loans to dodge late marks. Make sure to keep your oldest cards open to lengthen the average age, and freeze new credit applications for 6 months before your insurance renews to avoid any hard pullings, which of course can ultimately ding your credit pretty drastically. Next up is going to be pulling a free credit report, which you can do so at credit.report.com. There's also the ability to dispute any errors that might be dragging down your payment history, and ultimately ask for a rapid rescore if you just paid off a huge balance on one of your credit cards. Once that clean data hits, make sure to call your insurance customer service line, request a midterm rerun of your credit-based insurance score, and then ultimately lock in any premium drop immediately instead of waiting the next renewal cycle. One of the other big things that can really affect your credit is if you have businesses. Now, the truth is with this one is that business credit is separate from personal credit, meaning that if your business for some reason has a bunch of debt, that debt ultimately is not necessarily your debt. You still are, of course, on the hook for it, and obviously you need to pay it. But at the end of the day, your personal credit score will not be massively impacted by your business credit score. These two still have some relationships, and it's unfortunately kind of murky on what actually does affect each other. But at the end of the day, having good credit health and of course making good credit decisions will ultimately actually affect your credit in a positive manner rather than a negative one. Now, one of the things that I see people ask us all the time is an insurance provider, or what credit score should they be trying to go for, and how do they figure out what the best insurance company is for that? The truth is, there are so many options out there nowadays, and there's tons of things that you can choose from as a consumer. But unfortunately, most insurance providers are not made equal. There's tons of differences out there, and if you end up picking an insurance provider, it can cost you pretty severely. That's why I highly recommend taking our survey, which will be linked down in the description, where you can find out exactly what kind of insurance you personally need for whatever kind of situation you might find yourself in. As you can see here, when you click that link, you'll be taken to this page right here. All you have to do is simply enter in your zip code, how many cars will be on your policy, how old you are you currently insured, do you own your home, do you own a Kia or a Honda, and have you or a family member honorably served in the U.S. military. Once you answer all these questions, you can hit the submit button, which will send data and give you the exact answer on which insurance provider you should be going with, depending, of course, on your circumstance. That way you can get the best price available. Now, if you guys have any questions about this, make sure to comment them down in the comment section. Also, make sure to hit that like button and hit that subscribe button so you guys never miss any of our future videos. Also, please keep in mind that some of the links down in the description could be affiliate links, and we could potentially benefit from them at no extra cost to you. Other than that, though, that's pretty much all I have for you guys today. Hopefully you guys enjoyed this video, and I'll see you guys in the next one.